Have you ever found an amazing property deal but then struggled to find the money to get that deal done? In this video, I'm going to share with you the 5 steps that you need to follow to find unlimited amounts of money to be able to do the deals that you want. If you're watching my videos for the first time, my name is Hussain. I've been investing in property about 15 years, and on this channel I use my knowledge and experience to help you get further faster in your property investing journey. So when it comes to raising other people's money, this is a thing that I get asked quite a lot on social media, private messages, about how do you actually go about raising all this money. And one of the reasons people ask me this question, because I've raised millions and millions of pounds of other people's money for my deals rather than relying on banks to be able to get deals done. So here I want to break down the 5 key steps that I've found make the biggest difference and increase the success rate for you to be able to get the money that you want for those deals. So let's start straight with step number 1. The first thing is to be able to understand the structure of the deal that you're proposing when you talk about other people's money. So what do I mean by that? Well, there's 2 ways that you can potentially structure somebody else's money. One is a loan, when you're using somebody else's money for a fixed period of time, for a fixed return, and it's a fixed amount of money. So basically, for example, it's £100,000 for 1 year, we'd say a 10% return. Most people understand what a loan is. It's very straightforward and easy to understand. The second way you can structure a deal is for them to come into the deal with you as a partner, where they're sharing the risks and the reward. Some people talk about it as joint ventures, but also, just to be clear, some people confuse the language because they're unclear of the distinction between what a joint venture is and what a loan is. A loan, the amounts are fixed, the returns are fixed, and you're de-risking it to some extent for your investor. Whereas a joint venture, they're involved in the risk and potentially also the upside and whatever downside there might be in that particular deal. That's the first thing to get absolutely clear with. Another reason why that is so important, because the FCA have some rules around how we can use other people's money, how we can market for that money as well. And there's a particular document called the PS 13.3. Now I've got some more information in this in much more detail on another video, which I'll put in the link below, where I'll go into that in a much more depth. Step 2 is to think about what value you're going to bring to that particular transaction. Why is it that somebody would invest hundreds or tens of thousands of pounds with you for not just a return, but what is it that you're going to bring? So it's not just about you're going to make some money. Why is it that you're going to be the right person to be able to do that? And sometimes people get stuck with this. They think about, well, I'm just going to help somebody make money, but it's more than just that. You have to think about why you versus somebody else. So if you think about where is it you're going to find somebody to invest with you, people often talk about property networking events and finding people online on social media, but there has to be a reason that it's going to be you. So thinking about what value you're going to bring to the table. So where you're saying, I'm going to work with you to help you make money. And think about this also in the context of, say, an elevator pitch. So what I tend to say to people is I use my time, skill and experience to find fantastic property investment opportunities, then partner with people who have the cash in order to share that profit. Now I've said that a few times, which is why it just rolls off so elegantly, but you can work out what's a suitable elevator pitch for you in terms of a proposition. Why is it that somebody might want to work with you? Then the third step for us to be thinking about and for us to be really focusing on is how people are going to find you. So you have to be visible. So you may be doing amazing work right now, you're doing fantastic deals and you're making money, you're trying to now help other people make money, or you're trying to raise more money to do more deals, whatever it might be. But here's the thing. If nobody knows that's what you do, you'll be the world's best kept secret, and that's not what we want to do here. You want to get your message out to the world. People need to know what you're doing. And this isn't about pitching necessarily. So for example, one of the reasons I do my YouTube channel is to share the kind of projects I'm doing, how I'm doing things. And do you think just by doing that, some people might reach out and say, hey, I might be interested in learning how I can invest with you? Exactly. So it's just about sharing the knowledge. It's not necessarily pitching. So think about what is it that you're doing right now? How can you share that with other people? And so more people become aware of what you're doing, so that you can create effectively like a funnel that brings inquiries and leads to you. Now, if you're in a place right now where you haven't actually started and you're thinking, that's all well and good, you're talking about sharing deals, but I haven't got started and I haven't done any yet, then you can talk about potential deals and potential projects and how they would work. So before we get into step 4 and 5, if you're liking this content, make sure you hit that like button and give me some feedback as well. Put it in the comment section below. Make sure you've also hit that subscribe button and enable the notification bell so that YouTube can give you more of this type of content. I aim to do 3 videos a week, as I said, really to help you get further faster in your property investing journey. So make sure you hit that like button, give me some feedback in the comment section. So let's now jump into step number 4. This step is about understanding your investors' needs. So we've talked about what value you're going to bring. Now we need to think about what is it your investor would probably want. And the best way to do this is really asking questions, taking the time to get to know them and understand them. The biggest mistake that I see people making, and the reason they fail, and I believe the reason that I've raised significant amounts of money, is because I really take the time at this stage to understand the potential investor and their needs. So for example, how much are they looking to invest? Why are they looking to invest? Why is it you that they're considering? What type of experience they might already have, what return expectations they have, what's their appetite for risk, etc., etc., etc. It's not a questionnaire. This is something you do during conversation by really taking the time to understand. If you get this bit right, it will massively increase your conversion from potential expressions of interest to landing as money in your account. So the difference between the two is really by understanding the investor's needs. So taking time to do this now, it's really important to also understand that people are different. Some people you meet are able to make decisions very, very quickly. They have an idea what they want and they'll be able to make a decision just like that. Other people need to sleep on it, discuss it with a neighbor, reflect on it before they'll come back to you. It could be weeks. And some people you might have conversations with that go on for months before they are ready to make a decision. The key thing is that you're not pushy, that you're just taking time to understand them and working out what their needs are. Ultimately, the goal here is so you have enough information so when you create your proposal, it can fit like a glove and it's the perfect thing for them. Step 5 and the final step is about the security you can offer your investor for their money. Now, because you've watched it this far, I'm going to give you a 6th little bonus at the end, so make sure you watch all the way to the end. So security, when people talk about they want security, you have to think about ultimately what does that mean? When I'm doing this in events and I'm sharing this, say at a seminar or a workshop, I'm explaining how this works. Often what I say to people, on the count of 3, I'm going to ask you to shout out what the word security means for you if you're going to invest your money with somebody else. And I'll do 1, 2, 3, and everybody will shout out. But here's the thing, the answers will all be different. And that's because the word security means different things to different people, and the only way we can really understand what that means is again by asking the question. So my favorite question when someone says what's the security on my money, how I like to respond is, what would you like that security to be? And the reason I say that is because I want to understand a little bit more around what it is that they understand. So for example, somebody might shout, oh, I'm looking for a first charge, but you think, what does that actually mean? The reality is what most people are saying when they talk about securities, yes, I'm having a conversation with you about investing money with you, but ultimately it's not about making money, it's about capital preservation. Am I actually even going to get my money back? Is my money secure? Is this a safe opportunity? The reality is what's happening in the background, people are going through this process of getting to know, like and trust you, and they're working these things out subconsciously. So they get to know you because you might be sharing information, because you're speaking to people on a one-to-one basis. They get to like you because you might be saying things that resonate with them and they can connect with that and you come across authentic or however it might be. Then the trust bit comes from, do they feel like this is somebody I can do business with? Now, again, this is not a questionnaire that they're doing in their mind. It's not a tick box exercise. This is happening subconsciously. So you need to allow people to go through that process. So there's many, many different ways you can offer somebody security. It could be first charge, second charge. It could be restriction on the property. It could be personal guarantee. It could be shares, for example, allocation of shares within a project. There's so many ways it can be set up. The key thing is understanding what their needs are. And if you understand enough about security, you could offer a proposal on how it can be done. Alternatively, you can let the solicitors take care of this particular bit. So hopefully what the 5 steps I've shared with you will be able to help you in terms of going out and raising money. As I said, make sure you watch my video that goes into some of this in much more detail. That'll be in the link below. But the 6th little bonus that I want to share with you is understanding that money comes in the form of layers. What I mean by that is if you think about investment that you might need for your project, you might be borrowing money, say for example, a project at 2%, going up to say 20%. I wouldn't recommend it, quite a high rates. But what I'm trying to say is there'll be quite a broad range of returns that may be possible. Why is it that there's such a big range? And the reason for that is because there's different layers of money and different values of money. So for example, in a deal of say £100,000, you might have the first 75,000 as a layer, then you've got the next 25,000, then you have development money above that, and then you might have profit above that. So in that example, there's 4 layers. So I just wanted to share that with you. If you want me to do this in more detail, specifically about the layers of money, make sure you pop it in the comment section below, and if there's enough interest, I'll do a video in depth specifically about the layers and understanding how different layers attract different returns for investors. Look, I hope you've enjoyed watching this video. Make sure you hit that like button and also the subscribe button as well. Enable the notification bell. Let me know your thoughts, and I look forward to seeing you on the next video.